Chris and Michael and Alexandra, welcome. We're just waiting for attendees to show up, and so I think we had Rick. We had somewhere in the neighborhood of, I think, 16 or 18 people registered, and we have a mixture of our members as well as some startups as well in here. So we've got a good diverse group of people for this.
That sounds wonderful.
And we'll just wait for a few. We got 6 people in so far. And I hope everyone's having a day out there so far. I know winter's coming again by the looks of it in Toronto, which is never not good. Thankfully, no planting done yet, right? So
I pushed it. I do have some things in the garden at home, so we'll see how that goes. Might need to cover those before we're done.
That's right, exactly. It's been an interesting spring so far, that's for sure. They throw this on top of what's going on with COVID. It's definitely testing everybody this year. We'll wait just for a few more, and then we'll get started. And I think people will join in as we go along. But we've got a lot of content to go through and some good information. We want to make sure that we get to as much as we can today. And we are recording this, so if anybody does come in late and wants to see this, they'll get a chance to go back and review the recording of this. So. 11:03. We'll wait until 11:05, and we'll get started at 11:05. Rick, that's okay with you?
Absolutely. Yep.
Okay. Fantastic. We got people in so far.
Oh, sorry about that. I'm giving away the title slide here, Brian. My apologies there. Some absent clicks.
All right, we're going to get started. We've got some people here, so we're going to be recording this so that we have the opportunity if people want to listen to this a little later on. So thank you very much, everyone, for stepping in the middle of your day. We're working with BDO, one of our great partners at York Angels, on this. Obviously, we've got a lot of people that have questions around, what the government support that we have during COVID and how to be able to respond to that. But that being an underlying factor in all the areas of support that we can have for the startup community and for businesses and what's out there and what's available, things like SR&ED and how to ensure that when you're going for SR&ED, that you maximize your chances of getting SR&ED. And for many of us investors, we often hear our startups talking about the fact that they're applying for SR&ED or they have applied for SR&ED, and for us, those non-dilutive funds are extremely important to ensure that the startups we're investing in are leveraging as many dollars as they can to ensure that they've got as much money coming in the door or grants and things coming back to them. And so, we want to be aware of those elements, but at the same time, I think for founders understanding how do they get access to those or can ensure that the fact that they get those. So we have an amazing speaker with us. Rick is a longtime member of BDO. And Rick, I'm going to pass it over to you if you want to give a little bit of a background of yourself, and it's all yours. So thank you very much for.
That's great, Galen. I'll tell the short story that I was an entrepreneurial university student who closed a first round for my startup that required me to move off to California just a few years before the dot-com boom, to date myself a bit. So entrepreneur through 3 different ventures before getting increasingly competent at the finance side of business, and then getting hired by my accountant to work in valuations and a progression from there into government funding programs and tax credits. So that's a a short version of a life story. I do have a software and programming background, but have exclusively worked as a consultant on government funding programs and cash flow strategies with technology companies for the last 12 years. That means I see a lot, have a large client base, a team of 10 who help local companies with these programs. Without further ado, I'm going to walk you through an exciting presentation. I'm going to go quickly. I'd love to get questions. If you'd like to be subtle, there is a way to type questions in, and Galen and I will talk about them at certain times to take breaks. I'd love this to be interactive. So if you're comfortable with live questions, you know, I think that's wonderful too. So first up, we're going to talk about government support. And in general, there's been a lot of changes to the programs that are already existing and many new programs announced. Let's move on to our first slide. And that is a bit of a table of contents. So this is what's coming up for everybody. If you have a business that's maintained employment but seen a revenue decline, then TEWS and CEWS, twos and choose are for you. If you're involved with a startup or growing company that hasn't seen a revenue decline, maybe pre-revenue or simply thriving in this climate, we're going to talk about IAP. If you need to control your workforce and cash flows, we're going to talk about how WorkShare is a great solution for that. If you need capital to continue business operations, CEBA and BCAP are notable new programs. If people are going to be out of work, we're going to talk about the most gracious way to do that using EI and CERB. And if you qualify for tax credits, understand there's been major changes to the SR&ED program and others that we're going to talk about how to make the best use of, and in general, revisit how to utilize that program. It's a big one. I think that great block was because I was reading the chat. I've minimized it for now. So Galen, I can't keep the chat up while we go, so I'll count on you to interrupt me for good questions. And last but not least, there's a huge opportunity as the government responds to COVID-19, an incredible amount of money being spent incredibly quickly to help mitigate its impact on Canada and prevent pandemic or outbreaks like this in the future. So we're going to talk about the huge upside and opportunity at the end of the presentation, so everybody has to wait around for that part. Without further ado, we're going to step into the first program, and it's a small one. I promise we'll go fast and we'll take breaks for questions. The Temporary Emergency Wage Subsidy was the first program announced by our Prime Minister. It's a little bit complicated because no payout is coming to you from this program. You simply reduce the amount you're remitting to the government in respect to the taxes you typically collect, income taxes you typically collect from your employees. Many companies' payroll providers have already applied this for you, so you'll want to work with them to understand the program. It's a very small amount of money, capped at $25,000 per employer. It's equivalent to 10% of pay during qualifying periods. So this isn't a big deal, but you wouldn't want to miss it either. So if you are maintaining employment, issuing T4s, make sure someone's looking into TEWS for you. Much more exciting program is CEWS, Canada's Emergency Wage Subsidy. And that's because for a 10-person company, that's maintained employment of those 10 people all throughout the period, and if all of those 10 people make more than $60,000, this is worth $100,000 to everybody on the call. So a 10-person company, typically the return on investment from CEWS is over $100,000, and that is a payout directly coming to you. Those paychecks started flowing yesterday. CEWS requires that you maintain employment but see a revenue decline. We're going to talk about that revenue decline and how to see if you qualify. It's a 75% wage subsidy, but it's capped at $847 per employee per week. You can elect to do the revenue analysis for the decline on either a cash or accrual basis. And that cash opportunity is exciting because many companies with subscription services or long-term delivery contracts may have some flexibility now. It gets a little complex if you're claimant organization, if their companies are part of affiliated groups, if you have a US sales co or a parent that subsidizes your R&D on a cost plus basis. Non-arm's length transactions also complicate this. I'd encourage you to speak to a financial expert, happily someone at BDO, but certainly deal with your accountants to do the analysis if you're in one of those complex organizational structures. You could apply otherwise online today at the CRA web portal, which is comparatively convenient and stable. To dig into to CEWS, remember, because it's for that 10-person company, this is worth $100,000. We have to understand the details of this qualifying criteria of a revenue reduction. And so there's 3 periods that need to be analyzed. It can be claimed retroactively. So for many of you who are thinking we're at May 7th, can we go back? The answer is yes. If we can look at the revenues March 15 to April 11 and show a 15% decline in comparison to either period in the prior year or an average of January CEWS for the first. Let's think about that. For companies that had no revenue last year but did have great revenue in February on either accrual or accruals when you earn it, test, excuse me, and or average in your bank account. If you're seeing a decline in income any period, also it's you for free into the second period. If we think this being worth $100,000 to a 10-person company, each of these is worth some $30,000. Period 2, you'll see the requirements still go up a bit. The revenue reduction has to be 30%. And so again, if we didn't qualify in March and we're trying to start in period 2, we need to show a 30% revenue reduction compared to the same period in the prior year, or again, in comparison to January or February. So for some businesses, they may only qualify in period 3. They couldn't meet the tests in 1 and 2. That's just fine. You'll still receive the full benefit for that third period. CEWS is the 75% wage subsidy you've heard about extensively. It's a big program. Applications are live now. Please look into it. For those who bared with me and have invested in pre-revenue startups or in companies that have grown, then the Innovation Assistance Program is for you. Consider it a pair or twin of CEWS. It's a similar structure, a wage subsidy based on a percentage of the salaries paid in certain weeks. Unfortunately, this program opened and closed extremely quickly. It had about a 5 business day application window for their first intake period, and that closed on April 29th. So for everybody on the call, I'd imagine you are participating in or investing in innovation-based startups. I hope that you've gone into this first IAP window. We do expect it to reopen. It's not clear how much money is going to be available after they process that first intake window. It's drawing down a pool of $250 million. Let me get through the criteria for a second on this one. So applicants need to be for the CEWS we just described. Most applicants are ineligible because they don't see the revenue decline comparison to Jan-Feb or prior year. You have to have a plan to pursue growth and profit. Of course, anybody that is enjoying angel investment likely has a plan to pursue growth and profit, so we're okay there. You need to show a lack of sufficient financial resources to sustain operations. Now, this isn't very difficult because the application for this program is 8 multiple choice questions. So we're not talking about a complex application. You're simply asserting that there's a lack of financial resources to maintain operations. That could be because your launch is delayed, or perhaps the adoption of your technology might be different. IAP is a very interesting program. In general, to apply, you needed to be incorporated by March 1st, 2020, so nobody should be creating businesses with the hopes of enjoying IAP right now. That's a run through of wage subsidies. So we're going to move on to other programs, but Galen, any questions so far on wage subsidies? Any of these 3 we've gone through?
I don't see it in there, but I guess one of the ones that we had, and I asked this to someone else earlier, all of these are only eligible for companies that have a payroll. Is that correct? That they are registered as a payroll company?
Yeah, that's right. Excuse me, I apologize for the slide flicking there. That's all of these their payouts are based on your payroll. So the IAP program is the one exception. It allowed you to apply even if you don't have payroll, and no one really knows what happens if you answer that multiple choice question with, I have no payroll. It is allowed, so you can complete the application. It doesn't kick you out. So even if you don't have payroll, you could consider an IAP application. We just don't know what the effect is because the information we know so far is the payout, the benefit is based on your payroll. So I'm not sure what they'll do for startups without payroll.
Yeah, so those startups that are either using contractors, using gig workers to help do a lot of their work,
Yeah.
where they've been deploying their capital probably in a smart way as opposed to
Right.
paying payroll taxes. Most of these programs, because certainly when reading the IAP, that did not fit into there.
It wasn't clear, but you could complete the application. So I'm holding out hope, and I'll put up forward another scenario where we have the owner operator, an entrepreneur who simply didn't draw a wage last year because they're trying to keep the cash in their business. They're the ones who may be uniquely penalized, and I think there might be a window, a small bit of opportunity for those types of people through IAP if they didn't pay themselves, but might have been due a wage if we look at sort of a fair market value of their time. So
Right.
I can't promise anything, but I would still encourage you to apply if you think people are working and unpaid for the business for IAP.
And that would be only if they reopen that window for IAP.
Correct. It's currently closed. Yeah.
Okay. I've got a question from Chris asking regarding the CEWS. Is the period from March 15 to March 11, 2020 comparable to the same time frame as 2019 or March 2019?
It's the same time period. I was oversimplifying my slides. That's right. We want to look at that period, March 15 to April 11.
Of the previous year.
Of the prior year, I believe. Yeah.
Okay.
I think it's exact.
All right.
Good question.
And then Anna is asking, are these all open for nonprofit?
Most of them are. Yeah, there's exclusions for some companies that are owned by, let's say, a public entity where we have a utility or a university that makes them what we call an excluded corporation for tax purposes. So we do have an issue with publicly owned entities, but charities and not-for-profits, there are ways for them to participate in all of these programs where we analyze either their business activity decline or their revenue decline again. There's some slightly different tests we apply to them, but they are eligible for most of the programs we've discussed so far.
Okay. Any other questions from anyone? If not, we can move on. All right. So you can put in the chat, and then we can always address it at the next little break.
Absolutely. Work sharing is the next program. So this is a notable program. It's helped the Canadian economy in many other times of difficulty when we've had tariff disputes with the US or economic downturns. It helps avoid layoffs and more level of business activity. And it allows companies to control their cash flow without disadvantaging their employees as much as they would have to. So you designate a business unit in your company, let's say a sales unit, you put 3 employees who are involved in sales in that business unit, and an operations business unit. Each of those business units can then work for your company between 10 and 66% of the week, and you pay them for the time they work. They receive EI benefits for the balance of the week. So this is a win-win in the sense you control your costs to EI on this partial basis, so their wages are topped up through EI proportionately to the days they don't work in a week. As the business owner, this extends your runway dramatically. You now have up to 76 weeks where you can tweak how much your business units work between 10 and 66%. So, on the way up to 3 days a week. If you need to bring people back for more than 3 days a week, we have to talk about exiting the workshare program. But it's a really great way to avoid layoffs. You've made investments in the people who work for your business and you care about those people. You want to maintain that relationship and not have to go through retraining. So the intention here is to avoid layoffs by simply having them work less and partially participate in EI. It's extremely easy to apply for. There's big changes because of COVID where they waived the mandatory waiting periods, signatures, recovery plans, and there's no need to show a 10% reduction in business activity anymore. There is an interaction between the workshare program and TEWS, CEWS, but the combination of programs is likely still the right thing for you. So obviously a wage subsidy, you don't get the wage subsidy for the time your employees are on EI, and there is a bit of an offset. They're all additive, so you'll want to compare. I've personally made use of workshare in the past in one of my businesses. I found it very effective. Encourage everybody to look at it if they're seeing a downturn where they have to control their costs. It is a long-term program, so it's not just here because of COVID-19. Keep it in mind in the future, although the requirements to get involved in Workshare change once we're outside of this COVID pocket. Next up, we're going to move on to another program called the Canada Emergency Business Account, or CEBA. It's a loan program. It's a unique opportunity for us to make use of debt. And I'm saying unique because I personally have never seen a negative interest rate in my life. And this is the first time I've ever been exposed to that. So this is a $40,000 loan you can access through your existing financial institutions. You may have trouble creating a relationship with the bank if you didn't already have one. It's initially a zero interest loan, growing to 5% per year under certain conditions. And what makes it remarkable is not just the effective interest rates, but also that it's available without personal guarantees. I like to equate this to the kindergarten of debt financing. If it's not something you've considered in your businesses before, now is a great time to explore debt because of these remarkable terms. And those terms are such that if you repay the balance of this $40,000 loan by December 31st, 2022, there's a forgiveness of up to 25% of the principal. And then it's if we can't meet that deadline of repaying by December 2022, it's due and payable December 31st, 2025. To qualify, it's a government guaranteed loan, so the eligibility criteria is also very low. Another reason I think of this is as a debt for kindergartners. You only need to have paid between $20,000 and $1 million in payroll in 2019. That's T4 payroll. T4 summaries are what you'd need to show to qualify. Let's spend a minute before we take questions on this one to analyze those two scenarios again, where the principal we're withdrawing is the full $40,000, and we're able to make payments. That is, we effectively repay $30,000 by December 2022. That's the same as the negative 10.2% interest rate. So that's pretty incredible. And it's important to understand, I don't want anybody to run out and take out a CEBA loan to invest it with Wealthsimple or any other robo-advisor. There are some restrictions on the use of these funds. They're intended to continue business operations, so we may see some due diligence there to explain what the funds are used for. But a pretty remarkable opportunity with this negative interest rate. And that's scenario one. If we move to scenario two, you can see it's still extremely favorable because the interest doesn't begin to apply until the latter half of the loan, which makes a 5-year term loan effectively at 2.6% interest rate, with almost no payments of note through the first few years because the interest doesn't apply till then. So really preferential treatments here through CEBA. It's one of two major loan programs. Galen, I'm tempted to move on to the next one, but any questions so far on CEBA or Workshare?
I don't see any questions coming in, so I think we can probably move forward to the next one. And again, if anybody has anything, just pop it in and we can address it a little later on.
And I promise we're going to keep moving through these to get to other slides. There's a larger program called the Business Credit Availability Program that is not a loan for kindergartners. It has much more complexity and rigor to it. The premise is that cash flow shortages over the next 6 months and then extending out many years are going to be covered by this loan available through the BDC. And what we're seeing is loans of $100,000 to $350,000 for those who are compiling their own financial statements, and where you do have are working with an accounting company or are willing to step up and work with an accounting company to have a review or audited statements prepared, the loans can go up to $2 million. So typical BDC applications requirements apply. So this is for companies that can show cash flow projections, have financial statements, and evidence of discussing some issues with their current financing providers. It's not for refinancing, ownership transactions, or pre-revenue companies, but again, it has really remarkable terms. So work with me as I parse this last paragraph. It's BDC's base rate minus 1.75, which means the effective interest rate is 2.8%. I helped the company secure 2.2% recently. And it gets better than just that really low interest rate. And that's because there's no interest in the first 6 months, no principal repayment for the first 12 months. So you're borrowing money, but not paying back that principal at all for the first 12 months. From a cash flow perspective, that's remarkable. And then we can agree to a schedule of paying back 40% of the principal over the next 24 months. So 3-year term in this model with a last day balloon payment of 60%. So an extremely cash flow friendly financing option because the repayments are so low. What's interesting is the total amount you can borrow is going to be based on understanding your cash position. So you can't just walk in and tell BDC, I want $2 million. You're going to have to produce a model of cash shortfalls in order to justify the extent of the loan. And that means looking at your cash outflows, operating expenses, taxes, capital investments in new technology, loan repayments, in comparison to the cash inflows of revenue and additional financing. And remember, this is not for pre-revenue companies. So we're looking at a decline in revenue or a lack of growth in revenue over a period of time. And so if you can't process the statement I have up in front of you here, it means you might not be ready to talk to the BDC about this debt financing. You'll see there's a green highlight near the bottom where I'm modeling a change in cash position over many years. To make use of this program and its incredible debt terms, you're going to need to be able to produce cash flow statements. Again, many professionals can help you do that, but it's the change in cash position is going to have to show negative positions, as in you're planning to invest in technology over a number of years. This model shows positive cash flow positions. We'll need to see negative positions in order to proceed with BCAP. Brian, any questions so far, or are we moving on?
Move on. We can keep moving on.
Thank you. For those of you who did have to, some people who work or have to make layoffs, I want to caution you that the employment insurance program also changed to make use of code D. That's the illness, and it's been extended using this code for anybody who's sick or self-isolating or quarantined or forced to stay home for the care for children. So where we have some employees who are the single parent for a young family, daycare is not available to them. If they're not available to work, rather than lay them off with codes A, lack of work, or E, voluntary termination, or N, leave, please consider using D. It's a unique opportunity. They can get 15 weeks on EI to care for their children right now or to self-isolate if that's required. EI also is complemented by something called CEBA, C-E-B-A. It's not available to businesses. This is available to people. It shares the same application. So really there's no complexity in the sense that you apply online with the same form and the government should be sorting out whether you receive EI or CERB, excuse me, CERB. CEBA is the loan. CERB is the employment subsidy available to individuals. So last up, and I apologize for the jarring change in color here, is there is a rent forgiveness program recently announced. It's going to be administered differently in every province, but if you are paying rent of less than $50,000 a month, dollars a month with a 70% drop in revenue, you can make an agreement with your landlord to pay 25% of your traditional payments for 3 months. So that's a 75% forgiveness over the course of 3 months of rent. CECRA program, rent forgiveness. We're going to see a larger one for bigger businesses. This is for qualifying small businesses, in particular those retail outlet type of stores or B2C operations that saw that big 70% or more revenue decline. Galen, we're going to transition to new programs. Any questions so far?
No, I think nothing coming in. On the new programs, or I guess, do you have anything with respect to the matching program that was announced for the VCs at the VC level, and how that, because those could potentially be affecting some of the invested companies that we invested in early that are now at the VC stage that are maybe looking for top-ups. Do you have anything on that program?
Yeah, I'll briefly summarize that more changes are expected to make it more accessible. The key criteria I'll point people to right now, and again, you should speak to the BDC directly about this program, is that the program matches future investments with financing. So again, we're looking at something like terms on that money and covenants to go with it. And second, it's only available if the company has raised in excess of $500,000 from non-arm's length third parties. So to your point, you're right, it's at the VC level. And so for many angel investments that are $50,000, $200,000, those types of companies and ventures are likely ineligible at this point in time. So $500,000 is the magic number to reach out to BDC to talk about that. And again, it's not to match prior investments, it's to match new investments.
Right.
Keep those two
And I
things in
think
mind.
for us, it's if we have portfolio companies that have gone on to a BC raise,
Yep.
if we're still working with them or advising for them, would be advising them to be looking into those
100%.
type of programs with the BCs they're working with to ensure that they've got runway.
100%, yeah. And we saw the FedDev IBI program was structured like this for many years, and we're seeing BDC step up now to be more active. It's not clear what criteria the BDC is going to use or how available the program is yet to me. So I have some people in discussions, but we haven't seen that many new deals close recently, unfortunately, Galen.
Right.
So there's not a big sample set to work from personally. But I'd encourage you to speak to the BDC.
For sure. Okay, super. We can carry on.
We've got to talk about SR&ED because it's one of the key programs our Prime Minister and both the head of the CRA agreed it was a mechanism to get refunds out to Canadian businesses through an existing sort of infrastructure. So I have some updates for you that might be a little bit surprising. A month ago, 900 claims were just approved for processing. Those were regular claims in queue, and the CRA made a decision that based on their risk assessment to date, rather than hold them in a queue, we're pushing those claims out. So to be in that group of 900, you would have had to have had a claim already filed, let's say before March. The CRA had some struggles to issue refunds. Despite having those 900 pushed for processing, they were only averaging about 100 claims a week going out, and there's been a lot of pressure on them to accelerate those. So that's 100 checks and notice of assessment every week. That number isn't good enough, and so the CRA is working to increase that. So we have a backlog of checks being issued, even though claims are being approved. There's been a reassignment of staff and suspension of audit activity. Initially, all audit activity ceased through April 20th, and now there's a limited amount of audit activity going forward, especially for those of you who may have had claims in review. A lot of restrictions on how you communicate with the CRA right now. We can only mail things with Canada Post to one of 3 centers nationally. But what's exciting is there's an adjustment to the CRA processes and risk assessment. And there's a new option now. When you file your SR&ED claim, you used to be first assessed by a bot, and that's not new, that's always been there, and then moved into a queue where the Claims Control Center would have 45 or 120 days to decide if your claim would be reviewed. Because of tweaks in the process, many of us are going to receive notices of assessment with special terms on them, and those terms are going to say either your claim was accepted as filed without a review, or a new line saying your claim has been processed but may be subject to a review in the future. For companies that receive non-refundable tax credits, they always receive notices like this. But what's different now is that the CRA may issue refundable tax credits, a check in the mail to your business, and may still retroactively look at your claim. I'm not sure that the CRA has the infrastructure to go back and look at all the claims that are processed under these special conditions. The great benefit for you as investors and owner-operators is you're going to receive that cash and be able to use it. But of course, caution is advisable. The CRA is specifically announcing that they may come back and review claims retroactively. So be very careful about the notice of assessment wording that you receive. Have an expert help you interpret it, because it either means your claim was accepted as filed or you were provisionally accepted. And so this acceleration of processing means that I don't think the CRA is going to be holding claims in those 45 and 120-day service standard queues where you don't know if your claim is being approved or reviewed. I think what we're seeing is a compression of those queues to a largely automated process and retroactive reviewing instead. Some announcements came out with the CPA associations just last week confirming some of these policies, and we've been in discussion with the CRA every 2 weeks on conference calls to talk about changes to the CRA's approach to the SR&ED program. But it's exciting. And so, this is a big opportunity because traditionally there's more than 20,000 SR&ED claims a year. It's $3.5 billion that flows through, and we're trying to accelerate that to get money in your hands earlier and potentially increase the number of claims. For those who weren't familiar with it, SR&ED in Ontario can generate up to a 66% return on a salary dollar, meaning if you spend $100,000, there's a $66,000 tax credit benefit available. Those expenses are still deductible in your business to offset any revenues. The claims are due within 18 months of a fiscal year end. So some of you, we may be able to look back if you've skipped a year. It might still be possible to consider an SR&ED claim in this preferential filing time. It could pull cash forward at least for you. It is reduced by other assistance. I have to mention, if you're getting wage subsidies in this year, it might affect your SR&ED claim next year. So keep that in mind when you're doing projections. But that huge opportunity of the best case 66% benefit is notable. We're going to talk a bit more about SR&ED. And again, I'm modeling here a cash flow scenario of SR&ED where we operate for 12 months with a year end in December, spending $1,000 a month on a qualifying activity. Traditionally, the payouts came in a lump sum 4.5 to 6 months later. So from a cash flow perspective, SR&ED was a bit high risk because you need to have an 18-month runway. I want to stress that that's changed. We're seeing the majority of our claims being assessed within 48 hours right now. So not all of them, but the majority of claims that I'm filing with my team are being processed in 48 hours, which is a dramatic change from what you see on this graph. It means it's a great cash flow tool. SR&ED is a bit complex, and so I do have some slides. I'll try to make primarily visual slides to explain. The first thing you need to understand is for eligibility perspectives, an SR&ED project is a subset of an R&D project or a business project because it has to fit into a field of science or technology. And to simplify this, I'll look at the graph at the top. Requirements gathering fundamentally is talking about users and business objectives, and it's not an eligible activity, whereas development and testing might be. Same thing with user acceptance testing. If your users like technology, is different than if the technology works. We have to apply this technology filter, so if you can't explain your SR&ED projects in a way that fit in a computer science textbook or an engineering textbook, you aren't doing it the right way. If we think of a business project, what parts of a business project to improve a new product or process fits inside of a university textbook? That's the way we should describe SR&ED and the way we should assess its scope. You may not like that, and some judges agree with you that SR&ED could be claimed at a higher level, but it's important to understand to minimize risk, we have to fit in a university textbook. These slides are going to be available. We'll walk through them, but I'll give you a quick example of accounting software. Start with the presumption it's not eligible for SR&ED. However, the XML parsing, the way it imports and exports data from Excel, is a great technology that might be eligible for SR&ED. And so a part of your expenditure on accounting software R&D might qualify for this tax credit. In the same way, if you've developed a great artificial intelligence to minimize your tax burdens, that technology lives inside accounting software. It's under the hood of the car. And so, again, we're talking about a technology project inside your business project. If you can fit into this convention, you can usually be successful with the program and see your claims approved by the CRA. So again, it means that SR&ED projects live inside of projects, even span projects, because the same technology may be used in one or more products. If we think of how you document work, it means again that SR&ED experiments in red here on the bottom span features or span projects. And that's very common because the same source code, the same engineering principles are used in more than one product or process. Couple of misconceptions about the program. In most of the claims, if I break down the way whose salary is included in an SR&ED claim, the red indicates the scientists and technicians, but we also get to claim time on technical documentation, supervision, and technical oversight, and support engineering, the people that feed raw materials into machines or enter data. That data entry is an essential part of experimentation and analysis. Even though those people aren't mentally engaged in the experiment, they're supporting it with their activities. So as a labor expenditure breakdown, an optimized claim includes all that support engineering and time. A couple of other tips on SR&ED eligibility to understand how the CRA assesses it. You do fill out a form. It's an essay argument spanning about 4 pages of text. And you have to understand that it's not a merit-based evaluation anymore. The CRA changed the way it assesses claims to look for the material risk of non-compliance. And that means it reads a text like this with a highlighter, trying to highlight material risks of non-compliance. If you're talking about your users, if you're talking about user acceptance testing or market demand for your product, they'll likely highlight those sentences because that's something that doesn't fit in a university textbook. There's a chance you're confusing an SR&ED project for a business project. So in your minds, imagine when you're looking at text, what can you highlight with a highlighter? So for you, this is a form you have to fill out to access the tax credit. It's the T661 form, and you're one of the 3 stakeholders. For me as a preparer, I professionally communicate why a project's compliant and eligible through this form. It's the way I speak to the CRA. But for the CRA, it's very different. The CRA has structured the form in order to assess that risk of non-compliance. So when they read your files, they fill out a corresponding internal form that quantifies how many dollars they think don't qualify for the program. So just to reinforce that, every time a CRA agent reads a claim, they don't assign merit. They add up the dollars of non-compliance. And if that reaches a high enough dollar threshold, you get reviewed. So understand why some claimants are successful and some are not has to do with what they disclose in their T661 forms. How do you meet eligibility without adding any of these material risks? And there's a couple tips here because an absence of information is also bad. Visually here, you'll see some words are in red. This is from the CRA's guide to how to fill out the form. And I'd argue that everything in red is a checkbox. So if you don't include this content in the form, you're also missing out because you may not have sufficiently described the shortcomings or limitations of some technology available to you. If the CRA can't find that in the form, you've again added a material risk of non-compliance. Another interesting insight here is that the CRA has a claim review manual that tells their reviewers how to do their jobs, and it lists common issues. It lists 32 problems that claimants usually have. And here I've got some key quotes picked up from CRA reviewers over the years, but I'd encourage everybody to consider reading the CRM itself and look at what the biggest issues are the CRA looks for when they read reports. Again, any good SR&E professional should help you avoid these issues. But for those of you who are proceeding to file for the program, and 30% of you do file without a professional, it's important to be aware of what the information is used for. Galen, do we have questions on SR&ED so far, or can we keep going?
Yeah. So someone's got an anonymous attendee saying that they approximately a year ago they'd heard that 70% of SHRED applications were denied by the government. Has that percentage changed? If so, to what?
Yeah, so that's definitely a no. There is a 70% number that I can talk about. 70% of claimants use a third-party preparer service. That's the 70% stat I'm familiar with. First, and just in case there was a little juxtaposition there, there are other numbers that are publicly available about the CRA's due diligence, but 70% isn't the right figure in any year I'm familiar with. It's never been that high. The highest I've seen is that 67% of claims are subject to some due diligence by the CRA. That means they look at a claim, a human reads it and grades it. It's not bot assessed in any way. And the CRA considers making revisions to those claims. Not every review results in a change to a claim. I believe 1/3 of those 67% go to a full review. That means an agent's assigned who gets a budget of 20 to 140 hours to spend with your company, analyzing your compliance. That's a lot of time, a big budget assigned to you personally as a company. And the average amount of adjustment is around 60%. and I'm going from memory here with some stats, but every year the CRA has to prepare a report on their division's operations, and that gives us insights into how many claims are reviewed and how many adjustments are made. So the average adjustment, once you're in a review, is 60. Once the CRA has decided it has to make a change, the average change is a 60% cut, which means once the CRA has a negative opinion of your project, many companies are getting 0. So to get to an average of 60, it tells you a lot about the magnitude of the change.
Okay, and then Rick, just going back to the use of a service, a third-party service, to help you with your application, and there's many formulas that they'll use in charging you. Typically, what I've seen is it's an upfront amount of work they'll do, and then they take a percentage of the rebate that you receive. From utilizing a third party versus an applicant applying them by themselves, are there any statistics or any way to look at that and sort of say that the chances of success are X amount better by using a third party process, or is that does the government give any data on that? I know that's a little bit of a leading question, because you guys provide that kind of service, but certainly I know that the feedback I've received is it's typically much easier to use a third party service, even though it will cost you.
Yeah, I'm going to try to answer why impartially in a couple of ways. So first, the T661 form was changed to compel applicants to disclose if they're working with a third party, like myself and BDO, or any of the top 4 accounting firms, and many boutiques and other companies. All have SR&ED divisions and teams, so our involvement has to be disclosed, and we know that disclosure is used in their risk assessment procedures. So when I am personally involved in a claim, my name, Richard Burden-Uke, properly, my full legal name, goes on your form. In addition to my company's name, BDO Canada, are both associated with that claim and profiled separately with the CRA. So both the person and the company are profiled by the CRA, who helped assist with that claim. And we know that our review rates are lower than the average. So you'll have to take that on faith a little bit, that we know that the number of claims we file and the adjustments made to our claims is different than the CRA's average, because we have access to our own data. We also know through access to information requests that the CRA does have different standards for different companies, but they have always redacted the actual data. So we can't get a list of good providers and bad providers for you. Even using access to information requests, the CRA has won those arguments to not disclose that data. We know they use it. I can't quantify how much it matters.
Right. Okay. And then going back to the earlier in your slides, you talked to what's happening around COVID and the fact that some of these claims are getting processed faster. Does that communication end up coming through, let's say you've used a third party, is that communication coming through you as BDO, or is that directly to the claimant, the company themselves? How does that communication happen about your approval or acceptance for a SR&ED refund?
So as a part of a large professional accounting company, we get access to some committees and regular meetings with the CRA that gives us some insights to general information, not claim specific. And so, we have those calls every 2 weeks with the head of the CRA's SR&ED division, where we talk about their operations, and those are productive calls. But for a person, to make it personal, you should know how to use your My CRA account. So the first notification of your claim status comes from a change in your My CRA account, and there's no notification. You have to log in to look at the status of your claim. So I pay someone every day to log into every one of my clients' accounts and look at the claim status. That gives us an early indication that a notice of assessment is coming or a refund is due. That notice of assessment is the event as a claimant it'll be pushed to you. So you'll receive an email or a notification in your My CRA account, or receive a letter in the mail that is your notice of assessment, NOA, or notice of reassessment, NOR. And that's the way the CRA formally communicates with you, but you can always get ahead of it a little bit by looking at the status online. I'm not sure if that
Okay.
answers your question, but that document is the official document.
Right. So,
That
so
describes
that
claim
so
status.
I guess the answer is that it is going to show up in your account. It's and really the business owner, the founder, the head of the
Should
company
have
should be
access to that.
looking at that and take
Yeah.
access. And then the other would be we also have a number of companies out there that do shred financing that help to get dollars in the door faster for startups. Where do you see this situation as being only a temporary situation where they're going to be processing these claims faster, which would
Yeah.
potentially nullify the requirement for someone doing shred financing? But is that really just a temporary thing where still, we would see some startups wanting to still line themselves up with a shred financing company to get dollars in the door faster?
That's right. It's an interesting market. So first, I'll point out some opportunities. Well, I'll answer in a couple ways. The more of your finance operations you can consolidate with a big traditional bank, typically the better rates you'll receive. I'm generalizing. I don't mean to be mean to any third-party providers or private markets, but I wanted to make that general statement first, that if you're a repeat claimant, you should also discuss this with your bank to see if there's another option available to you. For the private markets, they're very innovative. They're providing different services. They're not just letting you borrow against a claim that's filed. To your point, that business may be drying up. If CRA is going to be pushing refunds out in 48 hours, more than half the time, then there's not a big reason to finance anything over 48 hours. Just the cost to sign the agreements makes that a bad engagement. But the private sector has been more innovative, so they're letting you, in many cases, finance against one future year's SR&ED claim as well. And so their response has been, forget about financing your filed claim. Let's make that financing available on a quarterly basis as you do work throughout the year. And so they're allowing you to pull even more funds forward. That's exciting and sort of a new frontier in SR&ED financing right now. I don't mean that to be a recommendation, but just try to explain there's still going to be a role for other financing operations available with the CRA.
Okay,
Without
great.
the CRA, excuse me. Yeah.
And I don't see any other questions coming in. And just a time check, we are at 11:53. So we have about 7 minutes to go here until our time window is up. We can always go a little bit longer. So I'll put myself on mute.
Thanks. I'm going to try to run through a few more programs because there are some other opportunities out there. We're going to do these fairly quickly, but there are new rules to bypass some barriers to selling to the government right now. So the buyandSell.gc.ca has expedited procurement and flexibility to support innovation and domestic capacity to access critical health supplies. So if you can in any way help mitigate the impact of COVID-19 and you would like to sell something to either the federal government through buyandSell.gc.ca or the Ontario government through their website, Ontario Together, you should be using those two websites to talk about the products and services you can provide, even if they're intermediate goods like fabric for an N95 respirator. Ontario Together had over 14,000 applications, so they were a little overwhelmed. If you've already applied, they're going to get back to you. They have many economic development officers around the province trying to help process those 14,000 submissions. Many of the programs that you might have otherwise dealt with have had their budgets reoriented to COVID-19. So the Strategic Innovation Fund, that funds big scale projects over $10 million. They're now focused on COVID-19 response. The NGen Advanced Manufacturing Supercluster is picking up 100% of costs related to scaling or retrofitting manufacturing lines to deal with COVID-19. So if you hear of those automotive companies that are now building ventilators, that's a great fit for dealing with NGen. 100% of the capital costs, staffing costs can run through that program in order to get you up to speed, helping mitigate Canada's response. That also includes distilleries that are retooling to make sanitizers. Please consider dealing with NGen for that. NRC and IRAP are also working on procurement of a larger group of products, including personal protective equipment. We've seen the Canada Shield, one of my clients, and several other companies produce new products with their 3D printing technology or their digital expertise to track disease and otherwise keep us all safe. Tons of funding available if you're going to mitigate COVID-19 through IRAP and NRC as well. To move really quickly, I'll also point out there's currently challenges posted that pay up to $300,000, then up to $2 million for the development of new low-cost sensors or point-of-care and home diagnostic kits. That's through International or Innovative Services Canada, ISC. There's a $15 million fund for rapid diagnostics, therapeutics, and digital health, also through ISC. And another $15 million being spent to improve facilities at Royal Mount in Montreal, where they're buying equipment and improving regulatory standards to bring that facility up to modern standards, so it can produce therapies, vaccine therapies, and other biological compounds necessary to mitigate COVID-19. So if you're a supplier of any services or products that can be used at Royal Mount, you should get in line for the biomanufacturing fund, again through NRC and ISC. If I wasn't going fast enough, I'll mention that the ISC relaunched something called their testing program. It used to be called the Built in Canada Innovation Program, and that's where they evaluate technology by procuring it from you, being your first customer, and seeing how well it works, finding a testing partner who doesn't pay for the technology, and they're your first customer. The Digital Supercluster in BC has a digital tech focus, so if you're a software company interested in perhaps dealing with mental health during this time of isolation, you would work with an existing member of that supercluster to try to pitch a program, and you may have a 50 to 100% cost subsidy through there. My Tax and Canada Summer Jobs have had changes. Those are both staffing solutions where you get a wage subsidy for summer students or for PhD candidates and master students. Lots of different programs out there. And last but not least, I'd be remiss if I didn't sneak in. If you're an investor and you've seen a big valuation go down, the technology and life sciences hasn't seen a huge dip in valuations in comparison to some other sectors, but there's a tax planning opportunity. I wanted to make sure you're aware of that. You might want to look at a freeze or refreeze if the valuation has gone down and you're looking to sell a company in the near term. Now is a great chance to consider some of these more advanced tax planning scenarios. Galen, over to you. I think that's the end of my slide deck. Let's hear questions. And the last slide I'll leave up here is canadabusiness.ca is a great website, a great app in the Play Store and Apple Store that provides access and information about funding.
Excellent. The last slide you just had up there on the valuations one. So that is that specific for companies, specific to companies and their valuations? Or is that something also that as investors, if we've had situations where companies have lost valuation, does this have any impact on us as investors?
And a state freeze is a common tax planning solution to effectively lock in the value that something will be taxed at. So let's say you're going to sell shares, you're going to pass it on to someone else. We want to make that sale happen at the freezed price, not at the current price. So when we have a period of low valuations, it's a great time to freeze a value of a company. So it's a larger tax planning opportunity in any downturn.
So it could be at a personal level. Okay.
Yeah, absolutely. Yeah, there's some more complex tax ways to shift IP ownership between companies that might also involve freezes, but that's a little more advanced. Happy to do some advanced tax planning in an economic downturn. If anybody would like to talk about valuations and the opportunities they present, we can do a more detailed analysis of that one.
Yeah, this is definitely something that might be of interest to a lot of our investors. Would be looking at something of this, and again, I think planning when we've got these kind of downturns, if there are opportunities to do something within your portfolio, this might be the right time to do that, right? So
absolutely, yeah, absolutely.
Okay. Excellent. All right, Rick, I don't see any other questions coming in from anybody. I know we had to run through some things very quickly, but obviously we've got this recorded. We will push out this recording to all of our members, as well as to our community of founders. And we will encourage that, anybody, if you do have questions, we'll have Rick's coordinates in with this video. And if you have any questions, feel free to reach out to BDO or to myself. There's Rick there on the screen.
Sorry. Yep.
And we can always connect you guys.
Thank you very much.
Excellent. Thank you very much, Rick. I really appreciate it. Everybody, thank you again for your time. I think we just came into the just over the wire, 12:01. Stay safe, stay healthy, everyone, and we'll have another one of these next week. Take care. Thank you very much. Bye-bye now.